Welcome back to the channel. Hope you guys are doing great. I have an update on Air Canada after their Q3 conference call coming up. Welcome back, guys. As always, thank you for checking out this channel. If you're new here, my name is Sean and I'm documenting my journey to financial freedom. So if you like videos about personal finance and investing, please consider subscribing to this channel. So earlier this year, I made a video about Air Canada because I had invested in the stock. And as you guys all know, I don't have to tell you, but this pandemic has hit the travel industry the hardest probably out of all the companies in the market, and probably no one worse than some of the airlines. Despite attempts of these airlines to make flights safer and airports cleaner and all that stuff, travel restrictions have been imposed on most countries in the world, and so that has really slammed sales and really brought down the stock price and market value of these companies. Now, I still hold stocks in Air Canada, so I listened to the third quarter presentation and to see how the company was feeling just about the situation in general and what they're doing about it. So I thought I would just summarize that call for you in a few bullets, and hopefully you guys get some value out of this. Here we go. Okay, so here are my notes, guys. The biggest thing out of this whole presentation that jumped out to me is that Air Canada has raised $6 billion in order to float themselves through this COVID situation. Now, $6 million is a lot of money, but it's good to also know their burn rate so that you know how long this money will last. Well, they actually published saying it'll be $1.1 to $1.3 billion per quarter. Now, there's more about the things they're doing to be able to reduce their burn rate to this much. I'll talk about that in a second here. Another thing they mentioned is that there are some insurance companies providing them COVID-19 insurance that's being offered to travelers to protect them when they make purchases for flights. So to protect them in case there are some restrictions imposed. I don't know if that's really helped sales all that much, but it's just maybe a nice to have right now. Now, according to this call, Air Canada was also the first to strip out the seats in a lot of their aircraft and turn them into cargo planes. This gave them actually $850 million in revenue. This is in response to the increased demand in e-commerce and the shipping of packages that results from that. So that was a smart move by Air Canada, in my opinion, and gave them some revenue on the side to help them out. They have also deferred 18 purchases from Airbus for aircraft there. They've also deferred 16 purchases from Boeing and canceled 10 Boeing aircraft purchases to reduce the costs from 2021 to 2023. Now, as we know from previous quarters, Air Canada has also had 20,000 layoffs after creating 10,000 jobs over the past years. They've suspended routes that switched to cargo services, deferring and canceling the orders of these aircrafts from 21 to 2022, like I mentioned. All of this makes for about a $3 billion savings for the next 3 years. And what this is Air Canada sort of shrinking and becoming more nimble, cost efficient, and sort of being ready to expand again once things get back to normal. It really is the company trying to position itself to re-expand when the market returns to normal. Now, this is challenging right now, and it is one of the biggest challenges for Air Canada, and it's because obviously they operate in between different countries, and different countries are now having different restrictions for COVID, different risk tolerances, and that makes it very challenging for airlines to have any sort of consistent service. That is basically the gist of the call. If you guys want to listen to it, I'll leave a link in the description. FYI, a little Easter egg in there is I'm pretty sure that at the 15-minute mark, at 15 minutes and 9 seconds, somebody farts. Go have a listen and see if that's actually what you hear too, but I thought that was pretty funny. I played that back a few times. So all these kind of moves have sort of bolstered the financial position of Air Canada, and their strategy, like I said, is just to shrink down right now, but also be ready to expand quickly when demand returns. Now, recently, the stock has rallied a little bit, so I think it was a little bit to do with the news from this third quarter call. So what has it done to the ratios? Let's go through those right now. So as of the recording of this video, the stock price for Air Canada is $23.73. This is all in Canadian dollars. That gives it a market cap of $7.032 billion. Their earnings per share was negative this quarter, so it's at it's a negative number there. And the trailing 12-month price to earnings ratio becomes very high, and you normally want to look for something under 25. Obviously, very unattractive price to earnings ratio. PEG ratio doesn't exist because of the negative earnings. Debt to equity ratio is 1.48. You usually want to see something from 1 to 1.5, so that one's okay. Now here's where things get interesting. You have a gross margin of 47% and an operating margin that is negative. Both of these numbers anyway are actually decreasing, which is not a good sign. However, the price to sales and price to book ratios are actually both quite attractive in a normal situation, and the current ratio is actually not too bad either. So when I see something like this, I look at it and I say, well, some of these ratios are nice, but it's obviously something is going on with its day-to-day operations. So this is something where I would investigate further and say there might be a temporary decrease in the stock price. There might be something going on. I would investigate companies that show this and figure out if there is a temporary challenge that they're facing and their price is attractive, it would be good to get in on this opportunity. Now, I think we all know what the challenge is, and it's obviously the fact that they can't operate as normal in the current situation in the world. So now the question is, when is the best time to get in on it? But anyway, those are the ratios right now. One more kind of interesting thing to do might be just to look at the history, just even of this last year of the stock, and see what it looks like. So let's do that. So we can see that Air Canada was affected early by the pandemic when it was still kind of isolated in China. As it spread worldwide, the restrictions were put in place, and that's when the stock really cratered. I invested back in February when it was still at $39. The reason was I was comparing it to something like SARS, which never really spread worldwide. So at the time, I looked at the history and I felt like it had gone down about 10%. I would get in on the stock, and in about a year, I would earn 10% when the price went back to normal. And I thought, hey, this is a pretty good deal. 10% in 1 year is a great investment. So that's why I bought in. Now, of course, things got worse. Everything went worldwide, and the price cratered. But back in May, I bought more at $19 in order to average down my price to $29. Now, you can see that it's been volatile this whole period while countries have been dealing with the worst of the pandemic, and now it's rallied in the recent few weeks. I think this rally is primarily due to the forward-looking characteristics of the stock market. And as people see more promising news about vaccines, they are getting back in early on these really depressed stocks and bringing the price up. So I couple this with the third quarter report that kind of saw Air Canada cut costs and reduce their future spending. And I think it's really like that securing their $6 billion in liquidity to make it feel like, it's going to be good for the next year. That's why I think that investors are coming back to the stock to sort of buy it now and sort of hold on to it. In conclusion, I think the market in general is in a bit of a tug of war right now between good news about vaccines and increasing numbers of cases of COVID. So, but I think that the Q3 earnings and maybe that hope at the end of the tunnel, the forward-looking characteristic of the stock market, will kind of hold Air Canada at its current price. Now, I don't like to give advice on this channel because I'm not a financial advisor. I would say if it were me and I didn't hold this stock, I would probably wait and see if it dips again. I would probably buy up some more, or maybe I'd buy a little bit right now at its current price. But I do feel that because Air Canada has secured some money to float itself through the next few quarters, we will see it start to rebound, and it might be advantageous to get in on it right now. That's just what I would do, but of course, please do your own research on this. I'm by no means a expert, but that's just my opinion on it. So stay tuned to this channel because I will be watching the stock, hoping that it does rise in the next couple of quarters here and shows some promise. Of course, I'll be covering it more on this channel. If you like this sort of thing or you want to follow Air Canada, please remember to hit that like button, hit that subscribe button. Have yourselves a great week, spread the wealth, and I'll see you guys in the next one. Bye. All right, so here are my notes, guys. The biggest thing that's jumped out to me is that Air Canada has raised... All right, so here are my notes, guys. The biggest thing that jumped out to me is that Air Canada has raised... Biggest thing that jumped out to me is Air Canada has raised $6 billion in order to float themselves in